Hello, this is Patrick. Welcome to Chart Built Wealth, Profitable Investing with Technical Analysis. Well, I'm going to post this on crude oil, and it is just an informational piece. I'm not telling you to buy, sell, or whatever, but I'm going to give you my best on the direction, both short term and long term, of crude oil. So, as you know, you that have listened, I've been long the iShares Commodity Index GSG, which is 70% energy, uh, and has gone up, I don't know, 45% in the last 3 months, based on my outlook for oil, because it's again 70% energy in that index. The chart was just a little bit better. So I want to share with you, and I went neutral on GSG, the iShares Commodity Index yesterday. And so I just want to explain this a little bit. I'm still bullish on oil. I still think it's going higher, and this was way before Iran and all that stuff. So I'll show you kind of the timing and how it unfolded. But you always start with uh, the long-term perspective. You need to build from long-term into short-term. So this is a chart going back to 1996 in crude oil, and you can see the bullish channel here, the blue horizontal trend lines, textbook uptrend, got a throw over top here. It was really classic, or people couldn't own enough. It broke out outside of the boundary of the resistance line, and Goldman Sachs was saying oil's going to $200 and da 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 da. And at that point, there was 98% bulls on crude oil. So 9.8% out of 10 people thought crude oil was going higher here. That's what you call a top. And from there, we had just a watershed decline from 147 down to 32. And then we started our bear market in oil. And here you can see the red horizontal downward sloping trend lines. And you can see this fall off the cliff into the low in 2020. I can't remember what was the cause of that, actually. But we got down to 4% of the investment community was bullish on oil at this point, down at $10 a barrel. So, 4 out of 100 people thought oil was going up. Now, this is a contrarian indicator. This is telling you want to start looking for a place to buy when this happens. You don't buy just based on sentiment, but it's one of your indicators. And this is just my primitive cycle analysis. There's technical people that are much more sophisticated than me, but this does work, lines up all the lows. And so prices shot out of a cannon, went upward into the high in 2022. And what I thought was really interesting about that, see, if you look at this, you don't have a lot of overlapping price action. It's pretty much straight up. Here you can see all overlapping stuff. And so that tells me that this was corrective. But what told me here, once we shot out of a cannon here and got up, is one of the tools in the toolbox that I like to use, especially on long-term cycle stuff, is the Elliott wave theory, which believes trends or cycles go in waves of five, 1, 2, 3, 4, 5, and corrections go in threes. And we got a nice pennant here, correction that took a while to figure out the pattern. I thought it would be a triangle, but it ended up being a pennant. And so this was 5 waves up, which completes our first wave. We had a 3-wave correction. That is our second wave. Second and fourth waves go contrary to the bigger trend. And once I saw this 5-wave advance, I knew the trend had changed from down to up. And so we're done with our second wave, and now we started the third wave. So what we know about third waves is that they are the most profitable, the most intense. You definitely want to be involved in third waves. And we're off to a good start, as you can see here. So um, that's big picture stuff. We should get a rise into the top of the third wave, which will be above our first wave. And then, so remember, we're in a third wave, then we'll get some sort of fourth wave uh, consolidation, and then a fifth wave if this holds. So we're going to just take a look at this consolidation and then the breakout. So the previous chart was monthly. Each one of those little bars or candlesticks represented a month of price action. This is a weekly chart going back about 4 or 5 years. The other went back like 30 years. And so here's the consolidation in a downward slanting area, but you know it's corrective because it's all these overlapping waves. So we got down here at the bottom and we had a positive divergence on our relative strength index. So what a relative strength index, the RSI does is it measures the underlying strength or the internals of an advance or a decline. And when you're getting lower lows that are stair stepping down and you're getting higher lows on the relative strength index, it tells you there's some smart money in there that's starting to buy this. And the downside volume is not as strong as it was, say, on this first low over here, where we got confirmation. And so we're looking and looking and looking, and I saw a nice bullish hammer here where prices started the week at the top, intraday tried to sell off further, but by the end of the week was back above. And I said, this is the low. And I sent out a video on a commodities uh, Sonomi. What is it? Sorry. It's still coming because I talked about it back in October and stating that I was bullish on energy and I wanted to buy GSG, the commodity ETF, because the chart was better than this kind of declining looking thing. And off we go. So where are we now? Well, I think we're in a fourth wave. So this is all within the big third wave. This is all within the big third wave. Within the third wave, we're going to get 5 waves. One, two, huge third wave. What did I say about third waves? They're the most intense, the most profitable, etc. So then we corrected. So is that the end of the fourth wave and we just go up to finish our fifth wave within the third wave? I don't know. This doesn't look like it's enough. It should have been a couple of weeks long or something. Over here, we had what, 2 or 3 weeks of a kind of a consolidation. So what I think there's a good chance that now this possibly could just, I don't know, we could bomb Iran tomorrow and they blow up all the oil in the straits of Iran and, this thing just goes ballistic. But what mostly, and that's a valid count. But another valid count is that we consolidate here for a while before we go higher and that we, in the form of a triangle. Triangles are normally fourth waves, and that would fit very well with the rule of alternation, which says if your second wave is just a small correction that goes downward, the fourth wave uh, normally is a triangle. And then once this consolidates for a little bit, and it doesn't have to be a long time, maybe a month or so, then we uh, would this would help generate a lot of power and friction and energy if we were able to kind of trade sideways here for a while and kind of shake all the bullishness out of oil. And so we'll see what happens with that. But I'm expecting some maybe some downward movement, maybe down to the 90 area in crude oil. We're at like 102 today. At the close, we were up to like 105. I wouldn't be surprised to see a correction, a little bit of a downward slope here, which I would be buying. What have I been doing? definitely selling into strength and then, buying on down days and selling on up days. So today sold some and I will be buying more and more and more if we go down to 90. So, one thing I wanted to talk about briefly is position size. So, you have to know your risk tolerance and you have to have minimums and maximums of what you have in a security. And it depends on it. It might be different if it's an individual stock, it'd be different if it's crude oil versus the overall commodity index. I think your weighting would be larger than it would be just for crude oil because you're putting more eggs in one basket. So, yeah, I would be, I'm pretty light in crude oil right now. Obviously, since I went neutral on GSG, which has 70% energy in it. So I'm expecting some sort of a consolidation here and the chance to start to rebuild my position on lower prices. So let's just take a look at the daily chart. I think you can see this a little bit better. And here's kind of what I'm looking at. I think, we could get a nice, now this thing could fall out of bed and it could go all the way down to 75 or something for all I know. But again, I'm looking for a consolidation. And we had a bearish engulfing pattern today where this red candle totally engulfed the prior day's price action. Also, you'll notice on this high, we got confirmation of this high with a higher high than we had over here at lower prices, and that's good. That suggests that we're going to have another high coming, which will probably give us some sort of a negative divergence. Here's what I mean. See how overbought we are? That's confirming that the underlying internals were really, really strong and that, there weren't big money starting to run out of it. But on the short-term basis, they are. But what this is saying to me is that if we do get some sort of a consolidation and work off this overbought condition, which is really at an extreme, it's up really close to 90. You don't see this anywhere else on the chart. If we work that off back down to around 70, that would give us more of a chance to go higher, faster, and farther. Hope that made sense. Okay, point and figure chart. Point and figure chart is agreeing that we're going to hit a higher high eventually at 144. But we have those of you that listen to the iShares Commodity Index YouTube I put out last night. We had a poll also there where anything more than a row of 10Xs means that you're getting overextended, and we certainly had that. Doesn't say it can't do this, but still it tells me that it is overbought and that some sort of consolidation should happen before we go farther to the 144 level. And I shared this last night on the iShares GSG Commodity Index, which is 70% energy. I said, the commercials, the big boys, the smart money, these aren't the small speculators that are usually wrong. This is the people that can move markets. And this is the Exxons and the Chevrons and the big commercial people that have very deep pockets and who know this business better than anybody else. They were at a very bullish position down here. They were less net short. Actually, they were the least net short they've been since 2016. So this only goes back to 2022. But for 10 years, this was this was the most bullish they were on oil prices when oil was down at $60 that they had been in 10 years. And you can see how rapidly they flipped that, and they're getting they're getting more short. So they think that this is a good time to lock in their price on oil and to hedge their product. So that would suggest some sort of a pullback here. One other chart I did not include for time purposes was seasonality, and seasonality for crude oil is bullish into June. So you also have that going for it. Thank you for watching Chart Built Wealth, Profitable Investing with Technical Analysis. I will include the tsunami video here, and um, please add some comments if you like more of this educational or directional, where I think prices of this are going. I'm really interested in some of the metals now, the precious metals. I could do something on that instead of just hitting you with a buy recommendation or a sell recommendation. Let me know. Thank you. Have a great evening. Adios.